Hello, 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 and happy Thursday to all of us, community. Welcome to today's community event on our YouTube live stream. We are very excited as always to have you all here with us today. And as always, we're always looking forward to these events as they give us really a great platform, great opportunity to talk about the industry that we're also passionate and enthusiastic about. And it also gives us the opportunity to zoom in and discuss our ecosystem, how we bring value to this industry by addressing major challenges in the industry, and just to also highlight and make examples how we do that, how we achieve that. This is a great opportunity that we have, and it's a great time to be alive and involved within the crypto industry with the blockchain technology, because we have the opportunity to really make major changes using this cutting edge technology that just so happens to be also the largest asset class it's the smallest asset class, but it's the fastest growing asset class at the same time. So with that said, community, I want to welcome everyone that is able to make it to today's community event, and everybody that is new, that is first or is just having this experience for the first time, being part of this session today. Welcome to our community. We are very pleased and happy to have you all here with us today. Also want to ensure you that all your comments that you put out will be read thoroughly. We'll do so at the end when we come full circle to address your questions, your feedbacks, your sentiments, your inputs. We'll come back and read your comments at the end of the session. As you see today, the topic is, what is your end game? What really is your end game? We in life in general, this is not limited to the crypto space. We always have to have strategy. You have to have an end game. You have to have a plan, because if you don't, then how will you know how to navigate through, certainties, how to evolve, how to improve, when you need to adjust, when you need to do better, right? So it's very important to have an end game. And in today's session, we're really going to look at our industry as a whole and look at how these financial institutions, they have an end game. They came with a plan, they execute, and they have an end game. So what about us that had 15 years a head start? What is our end game? What's our strategy? And are we really using this blockchain technology to its fullest to benefit us as enthusiasts, crypto enthusiasts, empower us? So this is what we're going to go through this session today. These are the topics that we're going to discuss. And there's so much to discuss today. So let's get right into today's topic. And as always, tweets are out. Bullrun, Killer Whale, Survivor. These are all out. So let's ensure that we are engaging with these tweets. Let's ensure that we put the word out and we bring awareness to our industry and also to our ecosystem as we do so. So please do so if you have not yet, as I am sharing my screen with you, so that we can get to today's topic. Let me share my screen here. All right, community. Let me refresh here. Make sure that we have the latest numbers. So like I say, today's topic, what is your end game? We need to be on top of things. We need to be really informed, aware, to be on top of the game. It's a very dynamic industry. And as you see, it's very sentimental driven, right? And another day, we see that we are down almost 3% within the last 24 hours. And if we see here, we see that Bitcoin was actually, in the last 24 hours, it was actually at above 73, approaching all-time high, before it dropped down by almost $2,000 back to from 73 to 70. Same with Ethereum. Ethereum actually touched 2,700 yesterday in 24 hours, and now it's back for 25. So these are things that if we're not aware of what's really happening, if we don't see the bigger picture, we're really confused, because why is the market all of a sudden down so drastically? Isn't everything going like it's supposed to go? Aren't the elections only a few days away? Aren't interest rate cuts already due within a week again on November 5th, November 6th or 7th, right? So why is the market all of a sudden so, dropping so drastically, right? This is how we are going to set the stage today, community, because we need to understand these things because they help us to grow, to be more confident, to understand what's going on in the markets. And that's the beauty of our ecosystem. We really have a broad topic, and we emphasize on education because we understand that education is power. So if you just look at the crypto coin market cap like this, the first is like, okay, you're confused, right? What's going on? Why is the market down? Shouldn't our bags be pumping? And fear and greed index is at 66, so it looks good, right? Why is it not green? Because if you're greedy, the markets are supposed to be green, but why is it down 3%, right? So let's set the stage for today, right? By answering these questions. Before that, there's one. Let's celebrate the anniversary. It's the 16 years today, exactly today, 16 years ago. Famous Satoshi Nakamoto published the white paper, Bitcoin white paper, right? So this is something that is great, right? It's a great milestone, 16 years of Bitcoin. So it really needs to be acknowledged, right? Because it brought a lot of changes, many layer one blockchains, many applications, a lot of growth happened since these 16 years, right? So that's just so by the way, and let's get to the actual answering the question that we just looked at, coin market cap, and we are so perplexed. We are in greed, so the market is supposed to be green because we are greedy, right? Why is it red? So let's kickstart. Let's set the stage. So we've discussed this last week already, right? Actually 2 weeks ago. And if we look at our videos, let's see, go to live. Remember how we discussed this actually 2 weeks ago, liquidity or liquidation. We discussed this before, and as we know, history always repeats itself, right? It comes in multiple ways. So this was yesterday. So yesterday, Wednesday, market meltdown, right? BTC and ETH led to 223 million in liquidations. So we talked about it 2 weeks ago. There were liquidations. This was yesterday, liquidations. And today, same thing. We are back to liquidations, right? And to understand this in full, let's look at some numbers, right? So like we said, within the past 24 hours, the crypto market saw huge liquidations amounting to 223 million. As Bitcoin and Ethereum is always these two are the most affected, simply because they're the most liquid. So liquidity plays a major role here. So they recorded major downturns, right? These sharp sell-offs led to the elimination of thousands of traders. We'll look at even exact numbers, showing that cryptocurrencies witness high price fluctuations and therefore unstable markets, right? So to answer the question of today, what happens? Why shouldn't we skyrocketing right now? We should be heading to the moon right now. Everything is lined up. Why are we down? Liquidations, as simple as that. And some sort of market manipulation, but we'll get to that, right? Let's get to that step by step. So let's look at some numbers here. Of course, Bitcoin dominates liquidations, 84 million, so on and so forth. Ethereum is second, and then really Solana as well. But mostly it's Bitcoin and Ethereum. So now what else do we want to look at? So if we look at real numbers, and this is staggering, over 64%, 64,500 traders, they were subjected to what? Liquidations, making it one of the most severe 24-hour losses. This is crazy. So over 64,000 traders lost everything. Their collateral, their assets, they were liquidated completely. So the biggest single liquidator, of course, is Binance. It's the largest exchange. Now, this is where it gets interesting. This pair right here is the most liquid pair. BTC, USDT, this is by far the most liquid pair. It was liquidated 18 million just in one day alone on Binance. So this figure shows the frequency of liquidations on what? On leveraged positions. Leveraged positions. Keep leveraged in mind. We'll visit this again. So another thing that we need to look at is the final thought. So this massive liquidation event helps us understand that the crypto market remains volatile. While digital assets are building popularity among traders due to high returns on investments, extremely high risks are involved, especially when taken on. Leverage is mentioned twice here, so it must be very important, right? Why is leveraging so mentioned twice? Because leveraging causes liquidations. So for us to really get the point here, and keep in mind these were over 64,500 traders. So for us to understand this, first of all, we need to define what is leverage. What is leverage? So leverage is use borrowed capital for an investment, expecting the profits made to be greater than the interest payable. So you're literally borrowing money that you don't have, and you place your collateral at risk. That's what leverage means. And this is how people get liquidated. And this is why the markets always look like this. So this is the reason why you see markets looking like this. And liquidations are ugly. Let's look at how liquidations look. The day started so great. We were at 72,900, actually at 73,000. And then this is what liquidations look like, right? This is how when you get liquidated, you can clearly see it in the charts. Liquidations are quick and ugly, and we'll get to it, right? So now we understand what leveraging means. Use borrowed capital, right? So let's look at it in more detail. Let's understand this even better. So leveraging in crypto trading means borrowing money from a broker to enter trading positions you cannot enter without borrowed money. So literally, you don't have the money. The money you're trading with, you don't really have it. In order to get a loan from a broker, you are required to provide collateral, which is also called the initial margin. So you're literally placing a collateral, which is in the form of Bitcoin or Ethereum. And then, this is it. Should the market move against you, you might lose your entire collateral. Everything you have, you're losing it. And this is what it looks like if you lose everything. This is why the sell-offs, because if you're being liquidated, meaning your Ethereum and your Bitcoin that you used as collateral, they get sold on the open market. And this is why you see these huge positions. This is why you see these liquidations. So another thing we should look at here, this is very interesting. This is not some random rug pull or a meme coin. This is Bitcoin that you're looking at right here. So who is selling Bitcoin, right? Who is selling Bitcoin now? One thing I want us to bring to your attention, community, is this right here. This individual is saying that BlackRock working in close coordination with exchanges to liquidate leverage while they also accumulate spot. Now, my question to us, community, is that, is this individual just spitting FUD? Is he a conspiracy theorist? Or is there some truth in what he's saying? What do you think? You know, we can't just take things like this for their face value. We need to verify things like this. These are bold statements, right? So of course we have to verify. We have to verify what this individual is saying. And to verify that, we need to look at facts and articles. So let's look at some articles here. So the approval comes several weeks after the SEC approved NASDAQ's rule proposal to allow the listing and trading of what? Options. On which one? BlackRock's iShare. Interesting. So remember that this just happened lately. This is a brand new article. It's just 12 days ago, less than 2 weeks ago. Just to keep you up to speed, both the New York Stock Exchange and NASDAQ, which are the two largest stock exchanges in the world, approved, but for NASDAQ, the SEC approved only BlackRock's iShares Trust for options trading. They approved the proposal, not just the listing, but also trading of options, just BlackRock alone. So this individual, there is something, is definitely right. So let's continue. Let's see what else. So options are derivatives. Options are derivatives. So keep in mind here, important is derivatives, but that allow the purchase or sale of an underlying asset. In this case, like we said, Bitcoin ETFs. So the fact is that less than 2 weeks ago, the SEC had approved that the BlackRock's Bitcoin ETFs are allowed to be traded, listed first of all on NASDAQ, and then traded on options on their shares, on BlackRock's options, right? So if we continue here, we need to understand why. Why is that so significant, right? First of all, before we go too far below, why is all these options trading so important? So many market participants believe that options trading on Bitcoin ETFs, what will they going to do? They're not only to increase institutional interest in crypto, but also it always comes down to what? Liquidity. Increase overall liquidity. These are not my words, because we're like, oh, there you go again, Steve, talking about liquidity again. This is not me saying it. This is just the reason why the SEC said that they think that it's important to have enable options trading for Bitcoin ETFs on NASDAQ, specifically BlackRock's iShares, right? Because it increases the overall liquidity, right? That's the reason why. Now, what else? Because it can't be just that. And this is now where it gets interesting. So the SEC wrote that it believes options on the Bitcoin ETFs would permit hedging. This is a new word, hedging. And allow for, these are not my words, this is SEC's words, right? This is the Security and Exchange Commission. They're the ones that said it. It's all about liquidity. At the end of the day, we find someone that talks more about liquidity than Steve himself, right? So here we go again. Now that we understand that, to really appreciate this article, we need to understand, what does hedging mean? What does the SEC mean when they say that besides more liquidity, it also permits hedging? So let's understand the word hedging. What does hedging actually mean? So hedging is a risk management strategy employed to offset losses in investments by taking an opposite position in a related assets. So In other words, hedging just means that you take two separate opposite positions. So you hedge your position so you don't lose. You can't lose now because you play both fields. You win when the price goes up, and you win when price goes down, because you take two separate opposite positions, like it says here. So what does that mean? What does that really mean? This means that this individual is absolutely right. We just verified that, yes, it's true. BlackRock's IBIT Bitcoin spot ETFs have been granted options trading. So, and because it's the largest asset manager, they have the biggest risk management, and they're using hedging. And the way you hedge is you use options trading. So they're making money on their way up, but they're also making money on their way down. So it's a win-win for them. It goes both ways, right? That's how it works. And we'll get into more details and clarify this even more. But as for now, this individual is absolutely right, right? So whenever you see a lot of liquidations and you see market volatility that looks like this within 24 hours, you know that liquidations are in place. You know that Bitcoin, BlackRock's spot ETFs that are using options trading to hedge their risks. So they're making money if Bitcoin hits all-time high, but they're also making money if Bitcoin drops $3,000 within 24 hours. So let's just understand that. And with this, we've just laid the foundation, community. We've just laid the foundation, right? And now that we've laid the foundation, let's now get to the real topic of the day, right? What is your end game? What is your end game? And to appreciate that, we need to understand, let's take two things with us. Liquidity, as always, this is our common denominator. But more importantly, we need to understand that one thing we need to take away here is this right here, derivatives. Derivatives, and what we need to understand here is also this right here. Collateral, provide collateral. Collateral and derivatives. And liquidity is always the case, right? That's the given. So keep in mind derivatives, remember that, derivatives and collateral, okay? So now let's get to this article. This is a brand new article, just came yesterday. Twitter is going wild over this article right here. So US Treasury says stablecoin growth is increasing demand for T-bills. T-bills are short-term government debts, right? In this case, US debts. So now there was a meeting yesterday, right? There was a meeting on Wednesday. So the US Treasury, there was a 132-page report. And they released this report on Wednesday, which was yesterday. And basically what they're saying is that digital assets have witnessed rapid growth from a small base. So it started small and it's been growing really fast, right? And as we can see in this, they're saying the truth. The best performing asset in the last decade. So it outperformed literally everything, right? So yes, it's true. So, however, that's not the main point. The main point is the growth has come both from native crypto coins like Bitcoin and Ethereum, as well as stable coins. So the digital asset market cap remains low relatively to other financial and real assets. And this also just emphasizes that. The reason why you see Bitcoin having over 500,000% growth in the last decade is because it's only 15 years old, right? And today, 16 years ago, the white paper was just published. So it's a relatively young asset. These are all mature assets. They're all between 30 to 50 years. So they already reached their peak, they're mature, they have enough liquidity and all that. Bitcoin and the crypto industry, they're still very, very illiquid. So every small increase or decrease of liquidity causes all this volatility. And now we understand where those volatility come from. And they come from manipulating the options, using options trading, right? Like we just discussed. Okay, so now another thing that is interesting is that the growth this far does not seem to have cannibalized demand for treasuries. So basically what Treasury is saying is that we were against Bitcoin and stable coins, or Bitcoin, cryptocurrency and stable coins, because we thought that they were going to cannibalize demand for treasuries. And if that was the case, the monetary system that is debt driven would collapse. But they just realized that actually it's not. And actually it's doing the opposite. It's actually increasing the growth and the demand for the treasury bills. So they have that aha moment, right? They're getting that, oh man, so we were wrong all along. Actually, cryptocurrencies are good for us because they're actually bringing demand, increasing the demand for treasury bills, right? And community, I just want us to look at something else. So it's not just that stable coins are obviously the more natural ones, right? Stable coins are they're purchasing treasury bills, right? If you look at stable coins right now, compared to foreign holders, debt holders, you realize that they're the 18th largest. They are ahead of South Korea, Mexico, and Germany, right? And this is very important. You realize that the US Treasury estimated that, 120 billion of stablecoin, they're using the collateral has been invested in treasuries, right? And another thing also that I want us to look at is this right here. So stablecoins play an integral role intermediating transactions in digital assets market. And over 80% of all crypto transactions now use stablecoins. And the Treasury said, now this is now the Treasury itself. Those with the Feds, these are the ones that are printing money. The ones that are in charge of stimulating the economy, they're the ones now praising hymns of stablecoins. They come to realization that actually cryptocurrencies such as Bitcoin, Ethereum, cryptocurrencies in general, and stablecoins are actually bringing demand for treasury bills. And this is exactly what we've been discussing in our community for a very long time. And just to make even more points, like Bitcoin and Ethereum, they dominate with 97% of all trades on crypto.com. You might think that crypto.com is not a significant exchange. Think again, because they had a spot trading volume of 139 billion in the month of October. More than double that of Coinbase. Coinbase had 57 on October 30th. But so Crypto.com had more trading volume, and all this, 97% of it is just from Bitcoin and Ethereum alone, right? And another thing I want us to realize here is that look at the pairs. If you look at the pairs, what is Bitcoin and Ethereum paired with? USDT and USDC. So, and look at the volumes are even. And Ethereum also paired with USDC and USDT in the billions of dollars. So one day, daily volume is 5.3 billion just in one day. And it's mainly Bitcoin and Ethereum. So why do you think are they traded the most? Before we answer this question, community, I want us to go back a step and understand one thing. Remember how we always said that, now this article is from yesterday, October 30th, 2024. It's a very new article. The topic here is US Treasury says stablecoins growth is increasing demand for US Treasury bills. This is the government. These are the feds. They're in charge of stimulating the economy. They're in charge of regulating the monetary system. They're in charge of the high debt, 35 trillion debt that we have right now. And there's an article that was released yesterday, right? And they finally understand that crypto is the stablecoins mainly are the solution to the debt crisis. They're the solution to our T-bills. They bring demand. They increase demand to purchase debts, US debts, and they're even comparing them with foreign nations, right, that are holding US debts. Now, if I may, these are topics we've been discussing for the longest. For example, the last video we created 4 months ago, look at the title, Blockchain, the solution to the US debt crisis, right? If we go even down to 6 months, 5 months, right here, stablecoin, the solution to US government debts. So these are topics that we've been discussing for the longest. Even this one year ago, we made a video on master plan is in session. In this video, actually, we were discussing, I'm not sure if you can hear it, but we were discussing actually the 4 players that are involved: BlackRock, Coinbase, Goldman Sachs, and Circle. This was, let's look at it. This was in September 7th, 2023. So we've been discussing all of this. We've been talking about how crypto market chaos or part of a grand master plan. We made videos such as this over a year ago. So we've been making videos like this. And actually, we can go even further. If you come to the live streams, the one we did even last week, what was it about? Stablecoin, the future of financial ecosystem, right? If we go further, we can even go back to, let's go back here. 6 months ago, the impact of stablecoins, right? That's another one we made. And then we can even go 8 months ago also, the role of stablecoins in the crypto ecosystem. So we've been discussing these over a year back. And the earliest one was actually last week. So between over a year and last week, we've been always talking about these. And finally now, these things are happening right in front of our eyes, community. So everything we've been talking about, it's happening, it's right here, it's manifesting itself right in front of us. Why are we mentioning this? Why is this so significant? Because this enables the Treasury, the Feds, to now print as much money as they can, to really print money into the economy and stimulate the economy as much as they can, because they finally understand that we have a solution to the challenge that we have, and they're now in progress of actually implementing the strategies, right? They're in the process now of implementing the strategies. So before we get into that, let's look at this chart once more. If you look at this, what in the first glance, we see that the oldest asset right here, obviously, is gold. It's over 5,000 years old. The rest, like we said, is between 30 to 50 years, right? And the reason why Bitcoin is outperforming them so much is because, like we rightly saw here, it's still a very young, very, very young asset, right? And the digital asset market cap remains low relative to other financial and real assets. So it's still a very small, very young industry. This is what we always say. And the beautiful thing about this is it just shows that the growth potential is still extremely high. And that's what we really need to understand. Now, keep in mind what we just discussed. I just want us to highlight, keep in mind derivatives and keep in mind collateral, those two things. Let's move on. So we always hear how there is historic funding inflows into spot Bitcoin ETFs, right? And this is today's article, brand new article, just today. So today is a milestone, community. Maybe it has to do with this, right? People are enthusiastic. Today, exactly 16 years ago, Bitcoin white paper was published, right? Whatever the case may be, nonetheless, the fact remains that there was a historic funding inflow into spot Bitcoin ETFs. So let's look at specific numbers here. And another thing that we shouldn't forget, remember how when we were reading these articles, what always came to our minds? What was the cause of the liquidations? Lack of liquidity. So they had to take leverage. They had to borrow funds they didn't have, right? Keep that in mind. And we say that liquidity is the common denominator. However, collateral and derivatives, remember that, right? Okay. So when we come here, and also the treasury, you see how the treasury is excited about the demand. Stablecoins are actually producing demand for debts, US debts. Why is that the case? Why are stablecoins paired? Look how they're paired. And they're dominating trades, 97% of trades. Why is that the case? And we need to understand this. It's because, and I'm repeating myself here, it's liquid. Look at its volume. Tether alone is at 68 billion in volume. If you even put together Ethereum and Bitcoin together, you barely hit 61, you can barely hit 62 billion in volume. So the two most largest cryptocurrencies combined still don't reach the largest stablecoin. Even though, as we see here, they account for 97% of trades on crypto.com, which has more trades than the largest exchange in the US. It has almost 4 times, more than double the trading volume just on these two cryptocurrencies alone. So this just shows you that stablecoins play such an important role simply because of their liquidity as well. They're extremely liquid. You can't have such a high trading volume if you are not liquid. And we've shown this over and over again. This number right here tells you everything. It's at 56 right now. And this is an indicator of liquidity. The higher it is, the closer it is to 100, the higher the ratio, the more liquid the cryptocurrency is, right? We know this by now. And this is why you see it so high. And comparison, if you compare that 56 with Ethereum, you get at least a 6.7, right? At least a 6.7, but it's still low. It's still very low because Bitcoin is usually even half of what Ethereum is. So Bitcoin is less liquid. It's not liquid, right? So the more liquid you are, the more volume you have. Liquidity has a direct correlation with volume. This is something we should really understand by now. And there's a reason why I came back to make that point. So this is now going to verify what we just said. How important are liquidity? This article is telling us how important liquidity are. You see how we always hear how historic funding inflow, spot Bitcoin ETFs. Okay, how much was it today? So spot Bitcoin exchange traded funds trading in the US saw net inflows of 893 million on Wednesday. This was yesterday. This is the second highest inflow ever. Now, the irony is this. Remember, we are verifying the importance of liquidity. So BlackRock, though, just BlackRock alone, saw an inflow of 872 million. So that means 99% of this inflow yesterday came from BlackRock alone. 99%. came from BlackRock, right? And that's the highest daily inflow since ETFs launched in January. So for BlackRock, this is the highest inflow in one day. It's all-time high. And 99% of this is BlackRock alone. Now, the question we should ask ourselves now is why? Why is everything going, all the inflows rushing into BlackRock? Besides the obvious, because BlackRock, like we said, and I need us to keep with this, we need to understand that BlackRock is the only NASDAQ that was given, that was listed for trading of options. Keep in mind, it was BlackRock's iShare, IBIT, right? This is the same IBIT that we're talking about here. So because they have, you can do options trading with it and hedge your position. Remember we talked about hedging? You benefit now if the price goes up of Bitcoin, but also if the price goes down, you also win because you can hedge your positions through options trading. Keep that in mind. Besides that, we need to also understand that IBIT is the most liquid ETF in the space. Once more, we identify if you are liquid, you get the most volume. It's as easy as that. They have 429,000 Bitcoin. They have over 30 billion right here in value, and they are double. They have 2%. The second one is Grayscale at 1%. So they have double the amount of Bitcoin that the second largest, and they have options trading as well. So what is all that for? Remember what they say that options trading is for, right? We read it here. Options trading is good. And this is the SEC saying it. This is the SEC that said it. That options trading, right here. Options trading are good for increase in overall liquidity. This, at the end of the day, this is the most important thing. And if you have options trading, obviously it was only BlackRock that was given that on NASDAQ. They are the ones that were giving options trading, and it's to increase liquidity. So obviously everybody rushes to the most liquid fund. And this is the reason why you see 99% of all these inflows, at least yesterday, which is a second highest inflow and all-time high since January when these ETFs launched. Everything, 99% of these inflows went to IBIT, BlackRock, simply because it's the most liquid. It's as easy as that. And they have options trading as well. So now that we understand this and we can verify the importance of liquidity and the relations between liquidity and volume, let's take this to the next step. Now that we understand that the Treasury is so excited about stablecoins, and they finally understand the importance of stablecoins and that they're actually increasing the demand for Treasury bills, which is US debts. Now, look what's happening. A snowball effect is starting now. All of a sudden, we see how Solana, this is it's just 11 hours ago. Solana now, Solaya, they launched a treasury-backed stablecoin now on Solana. And guess what you can buy, or what you can buy this stablecoin with, and what is involved to get this yield-bearing. It's a yield-bearing stablecoin. You have to get USDC. Is this surprising? So USDC now is playing a major role once more in backing or in minting this yield-bearing Solana USD stablecoin, and it's yield-bearing as well. So let's look at this more clearly. This is really interesting. So Solana and OpenEden are launching a yield-bearing stablecoin on Solana, right? Backed by United States Treasury bills. The same Treasury bills that the government on yesterday's, which was Wednesday, article released and said that we finally accept that stablecoins, Bitcoin, Ethereum, are actually contributing to treasury bills, demand for treasury bills, especially stablecoins. But even Bitcoin and Ethereum are mostly paired with what? With USDT and USDC stablecoins. So either way, they are paired with stablecoins. So stablecoins play a major role. So here you go, you see Solana coming with their yield-bearing stablecoin that is backed by treasury bills. But you need what you need to do here, the way this works is you literally, the user deposits USDC stablecoin. So you have to deposit, you basically, it's like staking, but you're not staking it. You're locking your USDC tokens in. This is amazing. So now you're literally removing USDC stablecoins from circulation. And once you do that, you receive, they're matched with one of several real-world asset tokenized, and you receive the SUSD. So you're literally locking up USDC stablecoin, and you receive the SUSD, which is a liquid real-world asset token. So let's look at this even more. Let's look at this even more. This is very interesting what we're seeing here. And what we need to understand is that this brings even more demand for USDC stablecoin, because literally you are locking up and removing your USDC stablecoin out of circulation, and you're receiving another stablecoin that is yield bearing in return. And this is how it works. This is how it works. So SUSD is the first yield-bearing stablecoin on Solana. It offers you 4 to 5% annually, and the stablecoin is backed, like we said, by US Treasury bills, which is US debt, and leverages the platform. So Sierra Labs launched USD, first yield-bearing stablecoin, and then this is the interesting part. The USD enables users to earn approximately 4% in interest, paid directly in what? In USDC, without staking or manual process. So what this does is, this gives you the option to lock up your USDC stablecoins, remove them from circulating supply. You're receiving SUSD, which is yield bearing, gives you 4% interest, and you get paid directly in USDC, and you can use this USDC to buy even more lock the USDC, get even more of them to earn even more interest. Do you see what's happening here? So not only will stablecoins be forced to purchase US debts, not only is the Treasury finally acknowledging in a 132-page report yesterday that stablecoins are actually contributing to the growth and the increase in demand of treasury bills, but now you have ecosystems starting to use USDC stablecoins to be locked away, and they're giving you other stablecoins in return that give you yield. So imagine how many USDC stablecoins are going to be staked, or rather locked away, so that they can receive this yield-bearing token and get even more USDC. And this is on an institutional level. So this opens doors to so many opportunities, community. And this is exactly what I was saying right here. So using a decentralized protocol, USD functions as a marketplace engine, connecting USDC codes with approved tokenized. So through this system, Solana system, users deposit their USDC, which is routed to purchase treasury bills. So a USDC buys treasury bills, and you receive USD in return. And this is how you get your 4 to 5%, right? Similar to a bank account. So why is this so significant? Because it's giving stablecoins, especially USDC, because we are paired with it, and we're also issuing USDC stable distributions. So this just gives the USDC more use cases. And it's also a way of taking them out of circulation, making them actually more, bringing more demand to this stablecoin and giving it more use case. So now that we understand that, there's one thing we really still need to understand. What does all this mean? All that this means is that we are about to be flooded with liquidity. And flooding with liquidity means inflation. But whenever we hear inflation, we should not panic. We should not worry. Actually, it's an opportunity. And there is this story about this individual in Germany back in the 1920s, and how he became the richest man in Germany from inflation. So if you understand history, and if you can learn from the past and understand what's ahead of us right now, from the past hour that we've been talking, and seeing how not only is the US Treasury now in line with stablecoins and cryptocurrencies, and understanding that they're actually bringing demand for the T-bills, meaning that they can now print even more, because now they don't have to rely on foreign buyers, on foreign nations having to buy US Treasury bills. Like, these are all countries, but this in green is a stable coin, and it's still such a small niche. It's a very small niche. Its market cap remains low relative to other financial assets. So there's still so much room for growth, meaning that as it's growing, so will the demand for treasuries. And when treasury demand is growing, it gives the Feds the green light to print even more money, which will cause inflation. But inflation is something that we should be embracing, because it gives us an opportunity of a lifetime. And this article, I just want to point out one thing, that inflation is something that we should embrace, especially if it involves stimulation of the economy, because that means that we are about to get flooded with liquidity, with fiat, with credit into the industry. And if anybody is supposed to be thrilled and excited, is our ecosystem, because it's customized to retain liquidity. It's customized to be efficient. It's customized to solve the 4 challenges within the industry. But let's take it step by step. This article literally just talks about how this individual escaped, or rather took advantage of Germany's hyperinflation after the World War I. And what he did is he literally took advantage of purchasing hard assets. And when the money became worthless, because just massive printing, because of the massive printing that took place, right? So what he did, he was borrowing heavily to pay for everything. He was already a wealthy man, right? He was already wealthy. And because the family owned a coal mine, so he used his assets to borrow heavily, and then he purchased hard assets, right? More appliances, everything he could lay his hands on, gold, assets, stocks, everything he could lay his hands on. That is an asset, right? And then once the Deutsche Mark became so worthless, because they were literally printing so much money to pay the debts down, which they owed due to after the war, right? So they were printing so much money, and then until the government just collapsed, the currency collapsed. Let's look at it here. The new era of fiat currency has distorted the real meaning of money, which emerged from voluntary exchanges to meet the needs of market agents. So instead of serving as a medium of exchange and a store of value based on individuals' preferences and interactions, in the market, fiat currencies can now be manipulated at will, like we saw here, right? Governments, not constrained by the discipline of commodity support, can print money at their discretion, leading to issues such as inflation, currency devaluation, and loss of purchasing power. We always talk about this, right? So, because of this, the Deutsche Mark collapsed, right? And what are we saying here? What are we saying here? We're not saying that US dollar is going to collapse, because the difference is the Deutsche Mark back then in the 1920s, there was no blockchain. There was no Bitcoin and cryptocurrencies. There were no stable coins that the Treasury Department finally is the solution actually to the debt crisis. Germany didn't have that in 1920. So the hyperinflation hit Germany hard and the Deutsche Mark collapsed. But in our case now, with the realization of the Treasury Department understanding the importance of the blockchain technology led by stablecoins, they now understand that actually we should implement regulations. We should use this blockchain technology, because it's literally going to bail us out and be the solution to the crisis that we're facing. And it will allow us to play this monetary policy that we've been playing all along. We can now keep printing trillions of dollars, and we have buyers of these debts in the form of the blockchain technology led by stablecoins. This is amazing. This is something that has never been able to be done before by any other global reserve currency. And the US now is at the stage where 99% of all stablecoins are US denominated in the first place. All trades are backed by US denominated stablecoins. And everything that is happening now is literally opening doors for more. So we should embrace this. And the only take away from this is we need to take advantage of inflation. We need to take advantage of it. And how are we going to do that? Because there'll be a lot of money printing happening right now. And this money printing is going to cause inflation. So if you're holding fiat, you're going to lose. So this is the time to hold assets, just like this gentleman did. Hold assets. And the largest growing assets, like we said here, is crypto. So assets are gold, stocks, right? Like we see here, real estate and all of that. But real estate didn't even make it. Bonds didn't even make it on this list. So all you have options are tech, stocks, gold, and cryptocurrencies. And obviously, as you see here, cryptocurrencies are the number one, right? And because they're still such a small asset class, there's way much more room for growth. So it's clear here what you have to, it's clear, right? It's not financial advice, none of that. It's just common sense that you see. Even the Treasury Department said it here. It is really a relatively the digital asset market cap remains low relative to other financial real assets. It is a small asset, and this is why you see such a substantial growth in cryptocurrency. So back to what we were saying. Now, if we want to learn from this German, from the hyperinflation that we're about to experience due to the government's printing, we need to have assets, period. You need to have assets. If you hold your fiat, obviously, it's going to be diluted, right? Devaluation of your currency and the purchasing power will be lost. So you need to have assets. That's the takeaway of this article. That's not me saying it. This is what this individual did, and it made him the richest man in Germany during the inflation period after the World War I, right? So let's learn from him, right? So let's move on further now. Who else is using debt financing, right? Who else is using debt financing? So how does MicroStrategy buy so much Bitcoin? They're doing the same thing, using the same strategy. And we'll be surprised to read and understand some things here. So MicroStrategy acquisition didn't rely solely on the company's cash reserves. To fund these investments, MicroStrategy took on substantial debt. In the midst of low interest rate environment, the company issued convertible debt notes to raise funds for Bitcoin purchase. These notes allowed MicroStrategy to acquire this cryptocurrency with borrowed money, right? While benefiting from favorable terms and low interest rates. So now, one thing I want us to understand here. By using debt financing, MicroStrategy effectively, do you see this again, leveraged its Bitcoin position. Where else did we read about leverage, community? Where else did we read about leverage? When it came to liquidations, right? Whenever you hear leverage, liquidations should ring the bell. So this individual is literally risking potentially losing, like we saw here. Should the market move against you, you might lose your entire collateral, right? And leveraging in crypto means borrowing money from a broker to enter trading positions you cannot enter without borrowed money. In order to get the loan from a broker, you are required to provide collateral. So when you hear MicroStrategy's strategy here, it is to leverage. He's using leverage, meaning money he doesn't have. He's placing his Bitcoin as collateral. But now let's understand this, amplifying its potential returns. So he's taking on leverage, borrowing against his Bitcoin. Leveraging is the buzzword here. But how does this work? And only, the word only here, in case that this cryptocurrency continues to appreciate in value. So as long as Bitcoin is hitting one all-time high after the next, Michael Saylor and MicroStrategy, they look like geniuses, right? They're genius because Bitcoin just keeps going up, 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 and it never crashes. So as long as that's the case, he'll just keep using debt financing, keep leveraging his position against Bitcoin, and keep going. But that's only happening if the cryptocurrency keeps going up. But you and me both know that obviously that's not the case, right? We all know that's not the case. Liquidations are happening literally every single day. One moment to the next, look at the liquidations that are happening, and people are losing their collateral on a daily basis, literally, right? And that's the whole idea. If the market goes against you, you lose your entire collateral. So needless to say, the potential of this going south, it can be very devastating. And this goes above and beyond because now they even went ahead to borrow, they aim to borrow even 42 billion now, right? MicroStrategy aims to borrow even 42 billion right now. So another thing that we need to look at here, community, is this. This is very important, right? So BlackRock's Beetle becomes the world's largest tokenized treasury fund. Let's understand one thing. We've been talking for an hour now, and let's bring it down to one thing here. So treasuries are only one piece of the pie. Of course, there are also stocks, real estate, right? And many other assets that can also be tokenized, and we can see them here. Of course, the largest ones are the US pegged assets denominated. They account for 99% of all stable coins. We have commodity-backed tokens, right, such as gold, like we saw, but it's still a very small market cap. And of course, like we've been talking about, tokenized treasury bills, they have been up over 780% just in 2023 alone. So this market is also growing very, very fast. So stable coins, commodity-backed tokens, and tokenized treasuries, these are the top three real-world assets that are being tokenized. And there is one tiny issue with this, right? It's all good, but however, investors' demand for these tokenized products is low at the moment. Now, the question we need to ask ourselves, why is the investor demand so low right now? Well, the answer is right in front of us. Thin liquidity as one of the primary reasons. Why do we always have to come back to liquidity? Liquidity is following us everywhere we go. So this idea of tokenizing stocks, treasuries, real estate is great. However, the demand is very, very low for these tokenized products because thin liquidity challenge. That's one of the 4 challenges we always talk about and that needs addressing, right? But guess what? This is exactly why BlackRock launched the tokenized investment fund. They had a solution for this. They understood that one of the 4 challenges in the crypto space is lack of liquidity. These are not my words, and this makes me very, very happy because it just shows me that these are facts, right? Everywhere, every article we've read so far, you'll always see liquidity is involved, right? We've always seen, oh, liquidity, there's a reason why liquidity, and if it's not liquidity, people are taking leverage, are borrowing, right? And we saw here that, where was it here? We saw that all this is done in the name of increasing overall liquidity. This is the whole reason why. This is the reason why options are issued. This is the reason why. And here also, it's all about more liquidity. Liquidity is everywhere. Liquidity is the reason for so many things. And this is why BlackRock launched the tokenized investment fund to address the thin liquidity on the demand for these tokenized assets. So they saw that, hey, let's create a pool and for these tokenized investments, and let's use this let's use these assets that we already have. Being the largest asset manager in the world, let's use it, and not only use it, but let's launch it on a blockchain, and let's pick Ethereum to do that, and let's tokenize, let's have a token on the Ethereum blockchain, create a liquidity fund with it so that we can fund all these tokenized assets, because we realize that there's a challenge, a liquidity challenge in the industry, and we need to address it. Who else to address it than the largest asset manager in the world, right? So this is why BlackRock used the common sense, launched on Ethereum blockchain, created a token, called it a liquidity fund, and they're addressing the liquidity challenge. Problem solved. Bring on all the real world assets. Let's tokenize the world and let's do this. And why is this happening? Why was this the case? We need to ask ourselves, why was this the case? What was so important about this? And one thing we need to understand, community, is that, and this is not my word, I want us to understand this. We need to ask ourselves, Larry Fink, the CEO, said in an interview earlier that the companies filing for spot Bitcoin and Ethereum ETFs were stepping stones towards tokenization. So the end game, today's topic, remember, what is your end game? So all along, we've been reading articles such as these, how Bitcoin, Ethereum ETFs have been hitting all-time highs and all this stuff. So you want to tell me that that's not the end game? All along we thought that that's the end game, but that's not the end game. So all these Bitcoin spot ETFs were just, you see here, stepping stones towards tokenization. So what's the end game then? If the ETFs are not the end game, they're just the stepping stones towards tokenization. So what is the end game? What is the end game then? So in order to get that, answered, we need to look at this. What is the end game? This article shows us the end game. The end game is that JP Morgan, they are using the tokenized assets from who else? BlackRock, their shares. And this is the end game, community. Remember, I told you to remember the word collateral. Remember, I told you collateral right here. This is what we need to understand, is that if we use leverage, you need to, in order to get your loan from the broker, what do you need? You need to provide collateral. Collateral is very important, and not just for you and me, but for institutions as well. So we are slowly understanding what the end game with these ETFs are. They don't care about Bitcoin and cryptocurrency. They don't care. They could care less about it. With their end game, because ETFs, like he said, Bitcoin spot ETFs, Ethereum ETFs, they were nothing but a stepping stone to tokenization. And the end game of tokenization is collateral. They want to use these ETFs, these shares, as collateral. That's the end game, community. Collateralization. So BlackRock said tokenization of money market funds shares as collateral in clearing and margining transactions would dramatically reduce operational friction. So what they're saying here is that they want to tokenize all the ETFs, the monetary funds. We know that by now. And the reason why they want to tokenize them is so that they can give it to their banking partner, the largest bank in the world, to use these tokenized shares, like we see here, as collateral. Why do they want it as collateral? Do you remember why? Because these ETFs, they've been approved by none other but the SEC, and they can now be traded as options on NASDAQ, right? That's what we read right here. The NASDAQ, the SEC approved NASDAQ's rule and allowing listing and trading of options on BlackRock's IBIT. This is the reason why. And who can trade with derivatives? Remember we talked about derivatives? Let's look at further. Why is that so interesting? So if we go further, we can read here that they already have a live, they also chose Ethereum-based blockchain, and they have a tokenized collateral network. And it was used by BlackRock's to tokenize shares in one of its money market funds, like we just said. Now, this is now very important to understand. Why are they using it for? For collateral. In what? Over the counter. For what? For derivatives trading. Why do we read about derivatives again? So here we have them in one sentence now. Collateral and derivatives in one sentence. Here we had them separated. We had collateral here, another article here. It was derivatives. One was derivatives, one was collateral. And here now, finally, we have everything. We now know it's a stepping stone. These ETFs were stepping stones for collateral and derivatives trading. So now we know what this all is because it happens over the counter. What does over the counter mean? It means that it's off chain. It's not using the blockchains. So all this liquidity that is about to enter the space, it's off chain. It's off the chain, right? And this happens only if you benefit only if you're on the Ethereum network, because where do all these collateral and these tokenized assets, which blockchain are they on? They're on the Ethereum blockchain, right? So this is why for us, we are fortunate because we are on the Ethereum blockchain. So we need to understand one thing here, community. Everything happens because it's needed as collateral and it's for derivatives trading. Now, derivatives trading, what makes the derivatives trading so interesting is because the question we need to ask ourselves now, how big is the derivatives market? How big is that market? Why is derivatives trading, collateral and derivatives trading, why is it so important? Because the derivatives trading, we're asking ourselves, how big is the derivatives trading, the derivative market? The derivatives market is, in one word, gigantic. Gigantic. And how gigantic is it? It's estimated at over $1 quadrillion. So now it starts to make sense why the end game of BlackRock and JP Morgan is derivatives trading. It's a $1 quadrillion market cap. And they are doing everything to tokenize the top three things, which is stablecoin, the US dollar, tokenize it, commodities such as gold, and then treasuries, because they want to use all of this as collateral and as for the derivatives market, right? Derivatives trading. And this is how large the market is, 1 quadrillion. This is a large market, right? So again, the stablecoin issuers, like we said, are fast emerging and significant source of demand for US Treasury. And stablecoin issuers are currently the 18th largest holder of US debt. Now, once everything is said and done, and BlackRock and JP Morgan have their way, we are looking at tokenized assets of potentially $1 quadrillion US dollars. And with the stablecoins regulations now coming into play, and now the regulators finally are realizing that these tokenized treasuries are actually increasing demand for T-bills, guess what that means, community? This means that, again, a lot of liquidity is about to be flooded into the economy. That's basically all it means. And now they don't have to rely on foreign US debt holders, but now they can rely on stablecoin themselves. And this is why you see large blockchains like Solana now coming with actually yield-bearing stablecoins that are actually backed by Treasury. This is why you see the regulators now understanding that stablecoins are going to help us finally with our debts. And now also, this is why you saw Circle filing for an IPO to become a public company and want to become the full reserve national digital currency bank. So you see that everything is falling in place right now. And this is also what we discussed as we saw, like I showed you here. Remember how we discussed this? There's a video we made over a year ago. Master plan is in session, right? Like I showed you, we've been talking about this, that the whole strategy is to push stablecoins to assist the government, right? The Federal Reserve, the US Treasury. This is all what Circle is working with. They're willing to work with the Feds, the Treasury, to ensure that Circle, which is the issuer of USDC stablecoin, becomes the digital currency bank, and it will need that. With all these trillions of dollars, hundreds of trillions of dollars, potentially quadrillion of dollars, is important to have a solid stablecoin that is regulated like USDC is, and that is utilized, has a many use cases on various platforms, and also is used to back the largest liquidity fund that is also on the Ethereum blockchain, which is the liquidity fund from BlackRock. It's also paired with USDC, right? And all these tokenized assets, they need to be provided with liquidity like we saw here, because one major issue is that it has thin liquidity. So this means that a lot of liquidity will be flooding the markets to provide liquidity to all these liquid assets. And this is not a problem because it's already on the Ethereum blockchain. Liquidity fund is brought by BlackRock, and JP Morgan is more than willing. They already have the infrastructure, the tokenized collateral network, and they're willing to use the existing assets by BlackRock that are tokenized as collateral for the derivatives market, which is over 1 quadrillion. in market cap, right? Now that we understand that, we also saw that the Feds, the Treasury Department, is open for stablecoin regulation, and that they really want to close down and bring regulation to Washington, right, to address their debt challenge that they have that keeps growing. Now that we understand that, we already have Circle. They already applied for an IPO. They want to become a public company to be the first national digital currency bank, because they're regulated in Europe already. Regulations are coming in the US as well. Now, if we look at who the largest Bitcoin holders are in the world, we'll quickly realize that in less than 8 months, actually now 9 months now, BlackRock is sitting at number 3 in 9 months. Keep in mind, MicroStrategy has been accumulating Bitcoin since 2020 for 4 years. And BlackRock literally has more than double. No, not more than double, but roughly over 170,000 more Bitcoin than they have. And Binance is even has been accumulating Bitcoin since 2017. And Binance is the largest exchange in the world. So this just shows you that in 9 months, BlackRock took over MicroStrategy that is literally taking on so much debt to keep buying Bitcoin, and they've been buying it for 4 years, but BlackRock just came out of nowhere, started from zero, and now they're about to take over Binance and Satoshi. That's the next step. So what will happen a year from today? How much Bitcoin do you think are they going to accumulate? Especially now that we know the strategy that they're using. You see the strategy that they're using. This individual was right. We verified it. They can use options trading, right? For derivatives, this has been their end game all along. Options are derivatives. And this is what they've been doing, and they are approved by the SEC to do so on NASDAQ. And only BlackRock's IBIT is allowed to do that. Like we saw here, what is hedging? They're using hedging to do all of this, right? So now that we understand this, we can only imagine that BlackRock eventually, they're going to be the top. They're going to accumulate so much because their end game is simple. They want to use their ETFs. First of all, they're going to tokenize them and then use JP Morgan's Ethereum-based Onyx blockchain, which is tokenized collateral network. They're going to use those tokenized assets as collateral over the counter, and then use them in derivatives trading, which is a quadrillion-dollar market. It's as simple as that. And right now, the liquidity fund for BlackRock is sitting at over $500 million right now. So it's still a very small fund. Imagine the growth of this fund that is about to take place, because the derivatives market that they're aiming for is 1 quadrillion. So this just shows you how much larger this fund, liquidity fund, is about to grow. And as this fund is growing, USDC is growing as well. So they need to become a digital bank. And the aim is to solve another challenge. And that challenge is to be the full reserve banking. And we know what full reserve banking means, right? And right here, in contrast to fractional reserve banking, full reserve banking requires banks to keep the full amount of each depositor's funds in cash and cash equivalents, ready for instant withdrawal on demand, also known as 100% reserve banking. Full reserve banking provides an alternative to a system in which only a fraction of bank deposits are backed by actual cash on hand, right? So they're solving a challenge that is very important for the financial system. And of course, the government, knowing that this system they're putting together is actually benefiting them because it drives and increases demand for the T-bills, everything is falling in line perfectly. Everything is falling in line perfectly. And in this video, I'm not sure if you can hear the audio, Michael Saylor is clearly having a 9-step strategy here. And if you focus on number 4 and number 5, let's start with number 4. Here, he's saying that I tweet about Bitcoin every day. I like Bitcoin and all, but micro strategy, we want to structure it in a way that it's outperforming Bitcoin. And what strategy are they using? They call it intelligent leverage. It brings us all the way back here. What does leverage do? What does leverage really do? And what did we learn about leverage? What was the takeaway here? High risk, especially when taken on leverage. Didn't we read about this? Over 64,000 traders were subjected to liquidations. Why? Liquidations across all exchanges happen. Why? Because leverage positions. So why is he so keen on leveraging so that they can outperform Bitcoin? It's simple, because the end game, this ETFs, Bitcoin ETFs, or Bitcoin itself, is literally nothing but a stepping stone towards tokenization. So this is the end game, community, for institutions, financial institutions. So all these Bitcoin ETFs that we hear the news every single day, they're just a stepping stone to what? To bigger things, which is collateral and derivatives market. And that's the end game. And this is exactly what Michael Saylor is doing also. He wants to use his own company, leverage, get more depth on it, and then use BTC to outperform Bitcoin itself. And then number 5 is even more interesting. He wants to acquire BTC continually while achieving positive BTC yield, meaning he's into the lending and borrowing game. How will he achieve this? He said it already. He wants to use JP Morgan. He always keeps talking about JP Morgan. And how is he going to use JP Morgan? Well, we already saw it here. JP Morgan is all about collateral. They are big on collateral. So he's aiming to lend his Bitcoin to JP Morgan, which will use it as collateral. They can trade it over the counter and then use that as derivatives to trade because it's a large market. And this is what Saylor is also doing. He's big on derivatives, right? And this is how, if you control the liquidity, you can manipulate the asset. And this is what's happening. It's been happening every day so far. The markets always have been dropping, right? Especially Bitcoin and Ethereum, because they're the most liquid. People get liquidated. Traders are losing millions of dollars. They're being liquidated every single day, and they're being used as exit liquidity because the end game is not ETFs. The end game is collateral. So while they are telling you to take on leverage to 10x your position on exchanges, is only to lure you to give them exit liquidity. So each time it reaches a certain amount, you wonder why out of nowhere there's just liquidations every single day, including today. You just see so much liquidations happening. And who are being liquidated? Small retailers that are trying to make a buck because they're telling people that, oh, buy Bitcoin. Bitcoin is going to $1 million by the end of the year, and all of this, and causing a lot of people to take leverage, purchase Bitcoin, and then this is going to happen, right? Like this individual just said. You wonder why, who's selling? Shouldn't Bitcoin hit 100,000 by now? But this will keep happening because the options trading that is now green lighted, right? If you have options trading, you have to hedge your position. Now we know what hedging means, right? If you hedge your position, because now NASDAQ allows options trading for BlackRock's IBIT, and they're using hedging. So that you have a position on opposite positions. If price goes up, they win. If it drops, they win. Both ways, right? That's what's happening right now, community. So as we see here, like we say, MicroStrategy, they want to now raise 42 billion to buy even more Bitcoin. over the next 3 years, right? And they want to use the same strategy that they've been using collateral, using the Bitcoin as collateral, and raise even more funds, right? And another thing also here is that now let's bring this home. Now that we understand that stable coins are really boosting demand for US Treasury bills, and this is what the US Treasury Department now finally understands. And now they are really taking interest in stable coins and tokenization. Why? Because they understand that tokenizations are tapping into a quadrillion-dollar market. And this market will be led by stable coins, because stable coins are the most liquid cryptocurrencies. And this means that they will purchase a quadrillion dollars worth of treasury, of debt, because they have to back these stable coins with US debts. And this is why the regulators are so excited about all of this, and they are putting out regulations, because they understand that the growth of stable coins are increasing the demand for T-bills. Now that we've said all of this, let's bring this home. Why is this so important to us? Because it was important for me to break these things down, and it took forever to really get to this point, but it's important for us to understand. This is great news. Let me go back to this article. Let's take advantage of the inflation. Let's take advantage of the liquidity that is about to get into the market. And how do we do that? You need an ecosystem that is literally developed to retain all of that liquidity, all that volume. And we're seeing it here all in a form of smart contracts, right? So with not just on the trading level, is this ecosystem retaining liquidity, accumulating with every trade, but also by the 10% we put aside. All it does is stake, buybacks, and stake. That's all it does. Why is this so important? It brings stability to the ecosystem, that we have a smart contract that keeps buying back and staking, accumulating more USDC to just keep buying back and staking, and bring that stability that we need, right? And also on top of that, we also offer the staking boosters that give you, in addition, if you have to stake 5 of them to maximize your USDC distributions to 100%. So this revenue also goes towards adding more liquidity as well. And besides all of this, of course, we as a community can choose to do the same thing like this right here on an individual level with our own wallet, decentralized wallet. We can also take advantage of our stablecoin distributions and do the buybacks and staking for ourselves. This also adds more volume, and more liquidity into the ecosystem. What did we learn today? The more liquidity you have, the more volume you have. We saw that right here. Bitcoin only has a 2.99%. If you look at and you see its volume is 41 billion, even though it has a 1.4 trillion in market cap, which represents 59% dominance. But a small market cap like 120 billion has more volume than the top 2 cryptocurrencies, right? Why? Because it's liquidity. So if you are liquid, it matches your volume. That makes sense, because the more liquid you are, the more trades you get. So why are we focusing so much on retaining liquidity? Because it will affect the trading volume. And because we use our volume efficiently, and once we kickstart that volume, it will also affect our scarcity as well. Like we always say, we started at 1 million in supply, in total supply. Now, actually, we are down to 966,000 in total supply, and it keeps shrinking. And the beautiful thing on top of all of this is our staking. Look at the staked percentage. We are the 3rd most staked cryptocurrency in the entire industry. So we only have 2 blockchains ahead of us that have a higher staking percentage right now. So keep in mind, we are just a small cryptocurrency community. We've never been through a bull market before. We don't have a large community yet. We are not even known yet. We're just coming out of a bear market. Yet we are the 3rd most staked community token already before we even get into the bull cycle. And if you look at our staked percentage and you add the liquidity to it, we are closing in on 90%. So almost 90% of liquidity and locked tokens. That means there's only 10% left in circulation. So our circulating supply is very low. So what are we saying here? Our fundamentals are very strong because we have the incentives, for example, as well. So the more liquidity we have, the more volume. The more volume we have, the more scarcity, and also we accumulate USDC distributions as well. So what does this mean? In order to take advantage of all of this inflation that we're about to experience due to the Treasury Department understanding that stablecoins play a major role, and having all these blockchains, like we saw here, Solana, they're coming up with their own stablecoin that bears yield, and that you literally are locking away your USDC stablecoin, right? You're literally connecting users deposit USDC, right? And then you receive USDC in return, USD in return, which pays your yield. And then you get paid in USDC back again. So you can do the same thing. And this is something that just happened 2 days ago, right? This is an article that's 2 days ago. On November 4th, we're celebrating our 2nd anniversary. And you see that same thing with BlackRock. BlackRock just came up with this liquidity fund on March, right? March this year, they came up with this liquidity fund. And they realized, why did they do that? Because they realized that there is an issue here. And the issue, the challenge here is there is no lack of liquidity. And for us to really make the best out of all these tokenizations, we need to pool liquidity together. And this is why they came up with this liquidity fund, so that they can pool, they call it the pooled investment fund, right? So liquidity plays a major role in all of this. After everything is said and done, it comes down to liquidity. And even JP Morgan is using the tokenized assets for BlackRock, and it's using these shares for what? For collateral. And why is collateral so important? You need it for derivatives trading. And they, as a bank, they need that. So you see that there'll be so much liquidity, community, because they have over 11 trillion, and the derivatives market is over $1 quadrillion. So you can imagine how much liquidity that the bank is going to have, and it will issue out for mortgages, car loans, businesses, and everything. And also at the same time, the stable coins are going to be required to purchase all this US debt, which will cause a lot of inflation. And the best way to tackle inflation is to have assets. And the best performing assets right now, like we saw here, is none other than cryptocurrency. They're the highest, best performing. Why is that the case? Is because they are still a relatively young industry, like it says here, right? Digital assets market cap remains low because they're they're low relatively to the other financial assets that exist right now, like we saw here. Gold is an asset commodity, stocks are commodities, but they can't reach the potential of cryptocurrencies. So this is the message for today, that you need to be part of an ecosystem that will be able to take advantage of all this inflation that is coming to this industry, and it needs to be efficient and sustainable as well. And this is what this ecosystem is addressing. We are addressing those 4 key challenges in the industry. Lack of liquidity, we are retaining it. Inflation, we are scarce. Incentive, we are accumulating USDC distributions to the stakers. And then we are using our volume efficiently, because the more liquidity we have, the more volume we have. The more volume, the more liquidity. The scarcer, the more we accumulate USDC. What does this do? It benefits the traders, the holders, and the stakers. All 3 benefit, and it's a win-win for everyone. Wasn't this in the first place what the blockchain technology was supposed to do? So why are we celebrating a 16-year anniversary if it wasn't meant to be for the common individual, for the retailer? So why are we celebrating it then? And the end game of BlackRock and JP Morgan is clear. All we saw today, I didn't see anything talking about you and me. There is no retailer in their blueprint, in their end game. They producing these things for themselves, for institutions, not for retailers, not for you and me. Retailers that are unassuming are exit liquidity. You are here to be the exit liquidity. While they're telling you to buy Bitcoin, they are busy hedging their risks and making money when the price goes up and down. So you're doing well by providing liquidity for JP Morgan and BlackRock as they're going about their master plan to collateralize, first of all, to use the ETFs as a stepping stone. That's not what they're after. They don't care about ETFs. It's just a stepping stone towards tokenization. And tokenization is a move forward to collateral. And they want to get into derivatives markets. And this is more liquid. It provides more liquidity. The derivatives market is more liquid than the cryptocurrency market. It's not liquid at all. It's not liquid, right? Like we said, this is why stablecoins and not cryptocurrencies are in more demand and are the solution for the debt crisis. And you want to take advantage of this inflation. And once you can take advantage of this inflation is by realizing that it's the cryptocurrencies that is the asset class that you want to be part of. And now the timing is perfect because the interest rates are being cut, elections are in a few days, and we have a DeFi project ecosystem that is literally ahead of the curve and retaining liquidity. Once you have liquidity pooled, you have volume naturally. So you don't want to go through a bull cycle that looks like this. You don't want to be part of this bull cycle and waste it, because after every bull cycle comes a bear market. So do you want to just go freely and then drop again 80 to 99%? Or do you want to be an efficient and sustainable ecosystem that as we're moving up, you are addressing these 4 challenges? Lack of liquidity, you're addressing it with liquidity. Inflation, you're addressing that. Incentives, and having a sustainable staking distributions, you have that. And using your volume efficiently, you have that as well. So that's the message for today, community, is that we ought to make the most out of this cycle that is coming. And this cycle is bringing a lot of liquidity with it, especially now that the Feds created a 132-page report just yesterday and finally understand that stable coins are actually in favor and they increase demand for treasury bills. This is a great thing. And we are right on the perfect timing that we have right now. And this cycle is going to be a massive cycle. And it seems to be that it will be one of its kind, larger than any other previous ones before, right? And whenever we see the markets being manipulated like this, let's all understand that these are just BlackRock and JP Morgan hedging themselves with options trading. And this is why they're manipulating the industry like this. Why are they specifically? Just show me who controls the liquidity and I'll show you who manipulates the industry, right? That's what they did with gold, with silver, and other commodities trading, commodities. and it's just another day at the office. So there is no reason for the market to be down like this. But now we understand that it's poor retailers that are just being liquidated, unfortunately, right? They're unassuming and liquidations are happening. And now we are below 70K right now as we speak. Liquidations keep happening, right? So stay away from leverage. That's very dangerous. Focus. This is why we do things differently. We're not debt driven, but we're liquidity driven. So we don't have to have, we're not offering debt to the community, but rather liquidity, right? This is why we always stress on liquidity. You need to have strong fundamentals to make the best out of this cycle, community. And that's it for today, community. Let me share my screen again, and now let's get to your comments, your feedbacks, your sentiments that you had today. Like we said, today's message was, what's your end game? And if you are not strategic, if you don't have strong mechanisms to really enable the community to make the best out of this cycle, then that's a waste of opportunity, right? And we want to make the best out of this bull cycle. We want to make the best out of this asset class that we have the opportunity to be part of so early on. So with that said, let me come back and start reading your comments. Let me go through them. Good evening, family. Happy to be here again at the feet of our great teacher. Thank you again, Steve. What a privilege we have. Stay protected and blessed always. Thank you so much, Queen Patricia. You're very much appreciated. Thank you for always being so consistent and showing up in these community events. May you also be protected and stay blessed. Brother Thembi says, greetings, Steve, Mama Wino, and the incredible BRL family. This promises to be a good one. Can't wait. Always a pleasure seeing you in the community, Brother Thembi. Thank you for your feedback. I hope you were just as inspired today, and I hope the message came across well and was of help and was of use to you. Queen Mel says, greetings, family, and our developers, Steve and Mom. Happy Thursday, everyone. Happy Thursday right back to you too, Queen Mel. It's a pleasure having you in the community. Thank you for being part of these events. My great brother Abdullahi says, welcome, Bullrun Warriors. Steve, you're the general leading the charge. I believe today's discussion will be insightful, informative, and inspiring as always. Let's conquer new heights together. Thank you so much, Brother Abdullahi. You are very much appreciated. I appreciate you very much. We're all generals, right? We're all doing our part. I appreciate your kind and warm words, but I'm just doing my little part within this community. Every one of us is a leader. We're all doing our best to participate, including yourself. You're an amazing leader in the community. We appreciate what you do to the community, your efforts, your consistency, your leadership. We see you on all various platforms, engaging with the community, putting the word out. So you're very much appreciated as well. And absolutely, we're going to conquer this place together. Unity is key here. Having a decentralized platform, it's very important for us to work together, right? Queen Kosi says, greetings, Mama Wino, Brother Steve, and the entire Bullrun family. Happy Thursday. Looking forward to an amazing session of education. Thank you so much, Queen Kosi. You are very, very much appreciated. Always a pleasure seeing you here as well. Thank you for your consistency. Queen Val says, hello, family. Hello, Mr. Steve, and our dearest Queen Mother. Happy Thursday to us. Happy Thursday back to you as well, Queen Val. It's always a pleasure seeing you in the community as well. Queen Cynthia says, greetings, Bullrun community. I'm looking forward to another inspiring session from our developer, Mr. Steve. Thank you very much, Queen Cynthia. Always a pleasure seeing you in the community. What a privilege to have you all here with us today. Queen Gloria, hello, Steve. Hello, community. How I love this BRL ecosystem. It's a pleasure seeing you consistently participating in these community events. It's also a pleasure seeing you. Happy to have you in the ecosystem. Thank you for your leadership, your encouragement. Very, very much appreciated. Queen Val has placed Telegram links on Bullrun, Killer Whale, and also on Survivor. So those that are new in the community, feel free to join our community. We are very active on all social platforms such as Twitter, Telegram, and YouTube, obviously, as well. We are very engaged as a community. So thank you, Queen Val, for posting these links. Queen Aloshi says, greetings, dear Bullrun family. I am highly expectant of yet another powerful lesson from effective teacher, Bro Steve. Thank you so much, Queen Aloshi. Always a pleasure seeing you here as well. Thank you for your consistency. Queen Maruta says, good evening, Bullrun family. I feel honored to be part of this family. Thank you, Brother Steve, for all. Thank you, too, for participating, for engaging, and for being part of this ecosystem. Queen Debbie says, greetings, community, and greetings to Mama Wino and my brother Steve. Thanks for this opportunity for us to learn. Thank you, too, Queen Debbie, for always showing up, being present, participating, your leadership, your engagement. Very, very much appreciated. And I also want to take the opportunity to thank you for the Sunday sessions. I hear that you took over as well. You're coordinating, you're engaging, you're encouraging, your prayers, your leadership. You're very much appreciated, Queen Debbie, for all that you do. Queen Joyce says, hello, community. Learning as usual. Thanks, Steve, for the teachings. Welcome, Queen Joyce. Always a pleasure seeing you in the community as well. What a privilege for us to have you with us today. Queen Grace says, thank you, Steve, for once again showing up to do what you always love to do, which is to educate us. God bless you much, together with our mom. Thank you so much, Queen Grace. I can only give it back to you as well. Thank you for showing up every single day. I see you on social platforms, on Twitter. You're always one of the first, if not the first, to retweet, to comment. You're very engaged. Your leadership is very much appreciated. You lead by example as well. So thank you just as much for always doing what you do best. And may you also stay blessed, Queen Grace. Queen Beatrice says, good evening, Bullrun community. Good evening, Mama Wino and Big Brother Steve. Thank you, my brother, for educating, informing, and inspiring us. May the Lord continue to bless you. Thank you so much, Queen Beatrice. Same to you as well. May you stay blessed as we progress through this journey in the crypto industry. And thank you also for being part of these sessions consistently. You're very much appreciated as well. Queen Mother Wino herself says, greetings to all the amazing queens and kings. I am always looking forward to these educational sessions. Thanks, Steve, for the wealth of knowledge you share with us. Thank you as well, Queen Mother Wino, and you're very, very much appreciated. You yourself, you lead by example. You're very consistent, very loving, and thanks for sharing your knowledge with us as well. Thank you for inspiring the queens every Sunday and inspiring the community every single day, both on Zoom and with the tweets. You're very much appreciated as well. Thank you very much, Mom. Queen Resego says, good evening, Queen Mama Wino, King Steve, and the Bullrun community. We're at it again, learning from the best dev. Thank you for your selflessness, King Steve. Thank you so much, Queen Resego. Thank you also for your consistency, your commitment. You're always showing up. You're always present. You're very committed. You're very much appreciated. And thank you also for your selflessness, Queen Resego, and your leadership. You're very much appreciated. My brother Juma Lincoln, hello community. Can't wait to learn more today. Thank you so much for your input, your commitment as well. It's always a pleasure seeing you, my brother. Thank you for being part of this today. Queen Tomeletso says, hello community. We are blessed to be having these educational sessions from our developer, Brother Steve. May the Almighty increase both you and our Queen Mother Wino. Thank you so much, Queen Tomeletso. I see you also on all social platforms. Thank you for your commitment, your consistency. You're a very valuable member of the community. You're very much appreciated for all the efforts all that you do. Very much appreciated. And then we have Queen Kube. Greetings, Steve, Mama Wino, and the Bullrun community. It's that time once again where our king does what he knows best, educating us. Thank you for sharing with us. Thank you too, Queen Kube, for always being present, your commitment, your consistency, your leadership. You play a major role in this ecosystem. You're very much appreciated as well. Thank you for being part of this session today. Queen Cynthia says, good evening, Queen Mom, Awino, and our dev brother Steve. Good evening, queens and kings. Thank you, brother Steve, for the wonderful teachings. May the good Lord keep on blessing you. Thank you so much, Queen Cynthia. You're very much appreciated as well. May you also remain blessed. You and yours. Thank you for your consistency and your leadership. Very, very much appreciated. And also, we have Queen Val saying that we need to hit the like button. We know the reason why. It helps to reach out to as many people as possible, and it will bring awareness to our ecosystem. And that's exactly what we need. It will also bring awareness to our industry, where we can really find ways to educate as many people as possible. Queen Mangai, good morning, says, good morning, community. Today's message is that we should hold assets to run away from inflation. Thank you so much for summarizing the bottom line. And it's always very inspiring, encouraging to see how queens and kings are on point, and are really getting the message and this and communicating it back to the community. Thank you so much for this effort. Thank you for your feedback. Very, very well received. Queen Lydia says, good evening, BRL family. Good evening to you as well. You're very, very much appreciated. Queen Mother Caroline, always a pleasure seeing you in the community. Thank you for your feedback as well by saying another great session from the mastermind of the Bullrun community. Thank you so much, Queen Mother Caroline. You're very, very much appreciated. You're an inspiration to all of us. You're very much appreciated and loved. And thank you for being part of this ecosystem and always being consistent in participating in these events. Very, very much appreciated. We have none other than my great brother Theo. He says, greetings, my great brother Steve, dearest Mama Wino, and entire BRL family. I'm blessed to be here, you beautiful souls. Great brother Steve, thank you for continuing to add immense value to us all. Thank you for your feedback. Very, very much appreciated. Thank you also for being part of this ecosystem, not just with the priceless wisdom and knowledge you freely share, but more importantly, the great example of a kind, caring, humble, and strong human being that you are. Thank you so much for your feedback, your kind words. You are very, very much appreciated. I can only give it back to you as well. Thank you for your leadership, your consistency, always being part of these sessions as well. Thank you so much, Brother Theo. You walk your talk. Thanks again for everything, good sir. You are very much appreciated. Thank you so much. Very kind of you. Very much appreciated, great brother Theo. I hope you and yours are doing great, and that your year has been going fantastic so far. And we appreciate you being part of this ecosystem as well. Queen Grace says, thank you very much, our developer Steve and Queen Mom. Powerful session on the stable coins and the liquidity season coming that plays a huge role with inflation. Best assets to buy is crypto. Beautifully said. There's really nothing more to add. Queen Grace said it perfectly. This is the bottom line. This is the takeaway of today's session. If anything, takeaway, then this is it right here. Thank you, Queen Grace, for your input, your insight, your feedback. Very, very much appreciated. Then we have Queen Kinole here as well. This is powerful. We are at the right ecosystem community. Beautifully said, Queen Kinole. Absolutely. Every ecosystem that is literally using the full potential of the blockchain technology to, first of all, put the community's best interests at heart, empower, enabling them, not just through efficient and sustainable platform that solves the 4 challenges in the industry, but one that educates them on a daily basis, day in, day out, week in, week out, and gives them a platform where they can express themselves and feel right at home, And that's what this is all about, to grow a global community ecosystem and use the network effects that comes along with this new asset class and new technology that we can embrace. This is the time to make the most out of this ecosystem. Like we always say, it takes just one cycle to make a difference, and we'll do everything in our part individually and as a community to achieve that goal, right? And we're doing it right now, one day at a time. Thank you so much for your feedback, Queen Kinole. And then we have Queen Gladys here as well. Says that thanks so much, Brother Steve. We are in battlefield where we don't know how to fight, but thank God we have Brother Steve and Mom on our behalf. We are safe. Thank you so much for your feedback. Thank you for your kind words. You're very, very much appreciated for what you say. You're appreciated in the community. Your consistency, very, very much appreciated. Community, this was amazing. It was an overly extended session today. There was so much to talk about today. And I encourage us all to re-listen to the session. I'll do the same as well, as there was so much information packed in this one session today. But it's very important for us to understand these topics, as they give us the confidence we need to have in this otherwise sentiment driven and very emotional ecosystem industry that we face, right? So this is it for today, community. In my side, it was a pleasure to be part of this session today. I had much fun today. Thank you for your feedbacks. Very, very much appreciated. Thank you for your warm and kind words of encouragement. Very, very much appreciated. I want to take the opportunity and give it right back to you, community, that we are where we are today because of you, because of us, all of us. Everybody's chipping in, doing their best, putting their best foot forward to ensure that all of us will succeed. This is a technology and an asset at the same time, and making the best out of it is what we aim to do. We're all in this to win it, and we all want to see each other succeed. And this ecosystem was customized and developed to make the best out of this liquid cycle that we are approaching. And also, it's not just going through the cycle, but it's literally going successfully through the cycle and making the best out of the liquidity by addressing these four challenges, which is lack of liquidity, inflation, unsustainable staking distributions, and then efficiently using the volume. Once we can achieve all of that as we progress through this session, bull cycle, we are going to make the best out of this that way. And with our best foot forward, and by educating the community on a daily, weekly basis, this is the best we can do. And the least we can do is to put the word out there on a daily basis through all social platforms. And every single one of us is adding value in their own special way. And together we'll achieve whatever we aim to achieve, right? With that said, community, I want to take the time to wish every one of you a wonderful rest of your week. It's been a pleasure. I hope you and yours are doing fantastic. And until we meet again, community, let's talk again another time. And for those that already are on Friday, I wish you a wonderful start in your Friday. And till we meet again in our next community event, which is on Saturday, looking forward to it. So with that said, community, wish you all a wonderful rest of your week till we meet again. Bye-bye, everyone. Stay blessed. Let's stay focused. And till next time. Thank you for being part of this session today. Bye-bye, everyone.